I was kind of surprised to see you say, no, look, it's worth allocating here because we've been fooled before. So what is different this time?
Yeah, right now we have our eyes on set on that 100-day moving average for ETH BTC, which, all else equal, if Bitcoin were to stay around this 104 level, that would put us north of 3,000, around 3,100. But of course, and we do think there's further upside in Bitcoin here.
Welcome in, everybody, to another episode of Coinage as things are getting interesting at the intersection of macro and down in DC with politics and the stablecoin bill. It is an exciting time in crypto, and happy to have back on with us one of the top analysts in all of crypto, Sean Farrell over at Fundstrat, back on with us today and fresh off of the conference circuit over at Consensus. Sean, good to see you, man.
Hey, Zach. Always a pleasure to join the show.
Yes, and as I said, we were just talking right before we jumped on here. I think some of the best research over there at Fundstrat in terms of kind of highlighting what's going on from a macro perspective. We're going to dig into your thoughts around where things start to pick up to hit that $175,000 Bitcoin price target, which has a lot of people excited. But before we get into that, I want to touch on the other crypto asset that is in the space, ETH, because you guys are allocating a little bit more to that in terms of this model portfolio. A lot of people are saying the worst is over, but what's Sean Farrell's take on Ethereum?
Yeah, I think as our subscribers are well aware, we've been pretty sour on ETH for the better part of the past couple of years. It's, we don't need to belabor the point, but it's been lost from a messaging perspective, and just the fundamentals obviously often follow price in this space. And so it's just been a tough name to own. It's also been heavily shorted, which, I'll perhaps elaborate more on in a second. But, that's also been a structural headwind and a part of the reason why it's traded so poorly, in recent years. But, I guess it was early May, around May 2nd or so, we started to see that ETH BTC pair trade sideways in a pretty tight range. And it was clear that there was some support bidder in the market, really defending that 0.01, 0.018, 0.019 level. And then, things were starting to turn in the crypto market. And I thought it was interesting to see small caps, their relative to performance bottom around April 14th. And if you look at the ETH BTC pair, it's followed that, small cap S&P 500 relative pair pretty closely over the past couple of years. And, that coupled with shorts rolling off of the CME, it led to an instance in which ETH was actually looking presentable for the first time in a long time. And, from our perspective, we think there's still some upside to go for, both ETH on a nominal basis and ETH BTC as well.
Well, just looking at that chart, Sean, this is just a year. If you zoom out, it's kind of this trend line even goes farther back. But we've seen ETH kind of hit the trend line, and this is just my own. And I think you and I share that we're not technically technical analysts, but, we're more of the macro dudes bringing fundamentals into the picture here. But if you look at this one, it kind of just looks like this has happened before, that you're not entirely sure. So I was kind of surprised to see you say, no, look, it's worth allocating here because we've been fooled before. Fool me once, shame on you. Fool me twice, shame on me. So what is different this time?
Yeah, well, if you look at, if you look at the rallies in ETH BTC over the past couple of years, there's always been some kind of catalyst involved. If you go back to May of last year, we saw a pretty big spike in ETH BTC, but that was around ETF approval, and so there was this exogenous catalyst that front loaded a lot of flows, and that all had to roll off. This was pretty organic and an instance of, I would say, price discovery. And I think there's also fundamental from a flows perspective reasons to be more constructive here. I'm sure everyone that is watching by now is well aware of Abraxas Capital Management. They've been in the market pouring capital into ETH hand over fist. There's debate around whether they are actually putting on delta neutral positions, but
Hmm.
even if they are, that means somebody still needs to be on the long side on in the derivatives market to make that trade work. And so there are flows coming into ETH at this point, whether it's Abraxas or someone else on the other side of that trade.
Yeah.
And yeah, and I guess last thing, just to ramble a little further, I do think that there is reason to be a little more optimistic about some cultural and strategic shifts within the Ethereum foundation. I think we've seen a lot of relative value siphoned from the ETH main chain over the past couple of years as
Hmm.
L2s have scaled and a lot of activity has gone there. But there does seem to be a strategic shift towards focusing more on scaling the L1, and that might bring some more speculation to the L1, and just make the user experience a whole lot better.
Yeah, I mean, I guess just to put a button on it, you hit my point. But in terms of year end price target for ETH, I think I can't remember what it is off the top of my head. But the most important thing is how quickly do we get here, or where do you see in the short term kind of this momentum building? Too, what's kind of like the target level to watch in the short term?
Yeah, right now we have our eyes on set on that 100-day moving average for ETH BTC, which, all else equal, if Bitcoin were to stay around this 104 level, that would put us north of 3,000, around 3,100. But of course, if and we do think there's further upside in Bitcoin here. Obviously that price target, near term price target, increases with that Bitcoin price increase.
Yeah, and we're going to get into how we get to 175 by year end in a minute. But before we do, you mentioned some of those L2s siphoning off value from ETH, and one of the biggest is Coinbase's layer 2 base. We've had that debate with Jesse Pollock on the show before. He staunchly defended against vampire attacking the Ethereum community, and we're not going to get into that necessarily. But my question around Coinbase for you, Sean, is more around the stock, because we saw surprisingly they're getting thrown in the S&P 500, which I think caught a lot of people off guard because Discover got booted. And when you dig into that, it was kind of interesting to kind of look back on where the stock has traded, still below, by the way, where it went public back in its IPO. And you and I were chatting before we jumped on here about the battle that's getting super intense between them and Robinhood. I wonder what you make of Coinbase here, and whether or not you see one or the other as kind of a definitive leader as we head into this next chapter.
Yeah, look, it's tough to argue that Coinbase still isn't the leader, especially from a market share perspective in crypto capital markets in the U.S. But I mean, any conversation you have with Coinbase users, especially those that trade crypto frequently, the user experience just isn't great. I think everybody that I know has had some poor experience with their customer service, or the functionality of their product. There are some rumors right now that they're trying to box out Tether from the domestic stablecoin market. That's obviously thematically not great for the space. And of course, you had the news that hit the tape yesterday, that they lost user data. And I don't know about you, Zach, but I get text messages on a daily basis from
Oh, for sure.
from, from hackers trying to socially engineer
It's
coins
impressive. It's
out of
honestly
my
very
my
impressive.
possession.
It's texts, it's calls. I've died 3 times, I think, in the state of Idaho, and had my assets moved. It's wild. It is
Yeah,
impressive.
and it's tough because, like, obviously nobody watching this is probably going to get duped by that, right? But um,
You never know.
I'm sure
Someone's
there are
parents
plenty.
could. Someone's parents
Right,
easily could.
exactly. There are probably plenty of boomers out there that are sitting on a big stack of Bitcoin that have been you know robbed of their possessions this way. And not to get too bleak, but you've also seen an uptick in, I think they're called hatchet attacks, but it's essentially people that are identified as owning crypto. Since these are bearer assets, it does make them vulnerable to getting attacked, kidnapped. We just saw a pretty gruesome attack in Paris the other day, and I don't know if they were a Coinbase consumer, if that the data leak led to that, but certainly there you can draw a line from you know Coinbase data leaks to potential for further kidnappings. And so I think it's just not good from a PR or user experience perspective, obviously. And then on the other side of that, Robinhood, I think, is executing remarkably well. They, obviously offer equities in addition to crypto. They've made smart acquisitions. They just acquired, the Canadian crypto company WonderFi the other day to expand internationally, to another jurisdiction.
Yeah, it's
And I
interesting. I
just,
mean, on those
stepping
on those
back,
comparison
yeah,
points, by the
yeah.
way, just in terms of performance, not to cut you off here, but
No,
just looking at Hood in blue versus Coinbase in red, it's kind of surprising.
yeah, no, and look, I think if you ask me to bet on this trading pair, I'm still probably long, Hood over Coin here.
Hmm.
And I think, yeah, the Robinhood, from a broader perspective, is also building a full stack product suite to support users across the financial life cycle. You see them moving into retirement accounts and robo advisors and things like that. And so, while you could question their growth that's slowed a little bit, I think they're doing a good job at monetizing their consumers a little better than
Yeah,
Coinbase
well, I
is.
think we've seen how that company operates in the past, in the GameStop blow up. We've seen kind of their. I get the sense that Robinhood's more willing to take risk than Coinbase is. Brian Armstrong has always taken kind of that longer term approach, and there are trade offs. And surprisingly, the data breach, notwithstanding, there in that discussion. But I do want to move on, Sean, to another interesting kind of piece. We talk so much, and we'll close on the Bitcoin. So if you're sticking around for this, got to wait till the end to get into the macro views here. But I do want to ask you about one of those pieces that we've seen work in the Bitcoin world, now converted over to the Solana world, which is kind of this strategy playbook. Janiver and a few other companies playing around with buying Solana, holding it as a treasury asset, as a publicly traded company. I'm going to bring up that chart in a sec, but I think it'd be fair to say it's one thing to do it with Bitcoin, maybe another thing entirely to do it with Solana. But if Solana's going to rip, why not? And so, kind of curious to get your take on kind of how you compare the two.
Yeah, look, I think there's a broader conversation we could have about all of these corporate treasury companies. I do think over a long term, when I say long term, I mean, over 12 to 24 months, there is probably some, recursive downside risk that um, that is created by all of these treasury companies, especially for these companies that are built around altcoin treasuries, just because those assets can be pretty reflexive to the downside. But in the short to intermediate term, you have a couple of Solana treasury companies. I forget its new name, but it was formerly known as Janover.
Yeah, we got this
Um,
chart up, DeFi Development Corp.
DeFi Development Corp. There you go. They raised, I think, 150 million or so to buy Solana, and Bitcoin is 25 times the size of Solana, and so if you normalize those flows for the relative size of Solana, that puts you at, I think, over $2 billion of Bitcoin equivalent flows for Solana, and so that's obviously a massive tailwind for Solana price. And then on top of that, you've had CME futures launched for Solana, and we're likely to see a Solana ETF come launch at some point this year.
Yeah, so tooling all of that up, I mean, I do think it is interesting. We're going to be chatting with the company. It's Solana's Accelerate conference this next week, Sean, and so a lot of this is going to be discussed out in the open. Probably going to sit down with them, which will be an exciting convo just to learn a little bit more about how they've rebranded, but how it plays out over time. And a lot of people are going to be chatting about the Solana ecosystem, so a lot to dig into there. But I mean, you are also pretty bullish on the Solana ecosystem, regardless. Maybe not specifically with this playbook in mind, but just in the asset itself. What do you make of kind of some of the momentum we've seen there? And as you said, with the ETF looming, seems like all of the institutional focus is still Solana's game to lose.
Yeah, no, I would agree. And I think also an interesting point is all of these L1s obviously price off of each other. And, seeing ETH rally like it has over the past couple of weeks, I think that's also a very interesting element to this market. If ETH reprices higher, if the ETH BTC can, regress to the mean a bit, I think that increases the near-term upside for Solana and perhaps some other alt L1s, but definitely Solana, because it's either explicitly or implicitly priced off of its relative valuation to Ethereum.
Yeah, and I think in general on that one, I need to, before we do this show, I always need to recap your price targets. But I think they're important just to ground people in terms of how much room we have to run, specifically when we're talking about Solana. And I'm pretty sure last time we had you on, it wasn't even 500 anymore. Was it north of 500?
No, I think our price target was the 4 to 500 range for this
Okay.
year. We put out
Still,
ranges.
still a long way to go on that one, regardless.
Yeah,
So,
yeah, absolutely.
still a lot you like in that ecosystem. But I want to shift and close with this discussion around the macro environment here because there's a lot going on. Whether you want to talk about, the fundamental economic levers to discuss and the big tax bill coming up, but also this idea of what's playing out on the stablecoin side, because a lot of people debating if we do get that vote approved, which surprisingly doesn't look as much of a slam dunk as it did just a few weeks ago because Trump's thrown his meme coin and his own stablecoin into the mix. And now Democrats are decidedly against the idea of approving stablecoins in the US. But maybe we start with that one, Sean, because if it does happen, I have the view, and I think we've talked about this before, that it is kind of a huge liquidity injection, at least on chain, that all these banks are going to be throwing money into stablecoins. A little bit debatable whether or not that's the same as if retail had thrown in a bunch of money into stablecoins. But what's your take on maybe how closely people should be watching that vote in DC?
Yeah. So obviously there is. I think by now we all understand the killer use case of stablecoins, how it can further dollar dominance overseas and be this real liquidity sink for U.S. Treasuries. But I think from a liquid markets perspective, the material aspect to consider here is that if stablecoin legislation gets across the finish line, which it actually looks like it might be up for another vote next week, which I think,
Mm-hmm.
or might be up for an actual vote
Looks
next
like
week, which I
Monday
think would be great.
afternoon is what I have circled on my calendar. But
Great,
yeah, we will see.
phenomenal. Yeah, I think that is a strong indicator that further legislation might take place. Importantly, a market structure bill, which I think a lot of institutions, there's a lot of capital that is waiting for defined rules around market structure to get more involved in crypto. And then, obviously that also, whether there's a cause and effect here, I think narrative wise, it certainly increases the likelihood of, some material SBR getting across the finish line, which I think speculation around is one element that could take us up to that 175 Bitcoin target that you just
Strategic,
mentioned.
yeah, for the strategic Bitcoin reserve. And in that sense, I think I don't, we haven't had you on since we saw the whole kind of political blowback. But I was tweeting about this, and it seemed to me that the Arizona Democratic governor vetoing that bill after it was approved to establish their own kind of pathway for investing in Bitcoin in that state kind of got blocked because of the increasing politicization of all of this, because you have Trump doing Trump things in crypto. But then you had New Hampshire, the live free or die state, I thought more fitting, that they greenlit and became the first state to allow for this. And importantly, haven't necessarily done anything off of it. They just kind of signed the bill. And now there's at least the ability to add Bitcoin. And so when you look at that, Sean, how do you kind of weigh that? Because maybe it doesn't need to be a thing that happens at the federal level if more states, albeit probably red ones, are going to be doing the same thing. So how do you weigh that?
Yes. So our view at the start of the year was actually we didn't place high odds on an actual strategic Bitcoin reserve getting passed. And when we say strategic Bitcoin reserve, that's not just keeping the Bitcoin that's been confiscated from legal proceedings. That's already been established. That's the government actually approving the purchase of additional Bitcoin. And we didn't place remarkably high odds on that happening this year. I'm still not above 50% on that happening this year. But we did place high odds on, yeah, the states leading the way. So states and other nation states front running, the federal U.S. government on a Bitcoin reserve. And you could argue whether those flows are actually going to hit the tape this year. There's probably not going to be that much from either state level or federal level SBRs, in this calendar year. But obviously, if things start to get rolling, flows are going to from elsewhere are going to want to front run those state level buyers. And so I don't think you actually need capital being deployed by states or nation states. But you just need the promise or the hope of that happening, and I think we're starting to see that.
Yeah, if not the States too, I think we're seeing a few of this. It wasn't too long ago that Eric Trump was speaking over in Dubai, and I think we're seeing a few different more sovereign wealth funds take a look at that. And I don't think that adds any political pressure here in the U.S. I don't think Democrats or Republicans in either the Senate or the House necessarily think about, there's some foreign pressure coming. We better change our mind on adding Bitcoin. I don't think politics necessarily works that way, but certainly for other buyers, it would. So I hear what you're saying. Outside of that, though, I mean, obviously it's been a bit of a crazy year in terms of the market swings we've seen around tariffs. Seems to be less of a headline moving things now. What do you make of, I guess, the next thing outside of crypto politics? We're looking at a huge tax bill as well. A lot of people in crypto, weirdly, I guess, or maybe predictably, getting excited about the idea of a huge deficit again. How do you see that shaping up in terms of what that fight could do for crypto?
Yeah, as you mentioned, we were pretty sour on crypto broadly in Q1 and through, I guess, early April due to the trade war. Um, but I think what happened between China and Scott Bessent, that allows us to put trade concerns on the back burner for now, and we actually likely see. And I think if I'm reading between the lines, the Trump admin is going to want to forge trade deals with our other partners through the 4th of July, which is around that 90-day, the end of that 90-day pause period. And hopefully we see more progress on China. But as you mentioned, I think attention is going to start to turn to the tax policy and regulatory policy. And you said it, the House bill that was dropped last week, or perhaps it was this week. They're proposing $4 billion in tax cuts with only $1.5 billion in spending cuts. So despite all of the early promises of Doge, the current prognosis is ongoing deficit expansion, which is stimulative. It's the government's lending money to the private sector, and that is historically very good for risk assets, and over the long term, leads to less credit worthiness and perhaps monetization ultimately. But regardless, it's a tailwind for Bitcoin.
Yeah, and I guess if we look out broader, and I just extend this theme, and obviously, again, I think everyone's, well, I shouldn't say everybody. I'm maybe giving too much credit to everybody, but you and I are in the same camp that, look, there's still room to run here in this rally, especially if we continue to see market strength, in this rebound that we've seen, kind of, macro stock market wise, Bitcoin leading the charge. There's still a lot of room to run. I, however, still concern myself with the idea of not just Strategy's playbook around Bitcoin leverage and what they've been doing, but all of the other companies that are now trying to replicate the playbook. And look, there are a lot of people who love Michael Saylor, and there are a lot of smart people, including Jeff Park at Bitwise, who are kind of just saying, look, I'll follow this man to the end of the earth. And that should be fine, maybe, if you like what he's doing, and he's leading the charge. But all these other companies that are now kind of copying the playbook do give me a little bit of concern, Sean, and I'm curious if it does for you as well. When things start to turn, because we know that day will come. If you've been through cycles before, it's not always up only. And sometimes people forget about that. So I'm wondering if you kind of have that ticking time bomb in your head as well in terms of what might happen to some of these companies, Jack Mallers, all these people now doing the same thing.
Yeah, I don't know if I would go as far as saying it's a ticking time bomb, or if it is, I don't think that the clock on that time bomb is running low just yet, but it is something that I'm putting on my radar. I think everybody is aware that the leverage that's there hasn't been that much leverage built up despite throughout this bull market. The leverage that has entered the market has been through these corporate treasury companies. And look, I'm not worried specifically about MicroStrategy or strategy, I should say. None of their Bitcoin is encumbered, and Saylor, his selling point is that he does not sell, and I think people trust him on that, and he's not going to. And it would take a shareholder revolt for him to actually have to liquidate his Bitcoin, and that's a long ways away. But like you said, it is these perhaps smaller players that uh, don't have the same access to capital markets to recapitalize their balance sheet at a moment's notice,
Hmm.
who may have debt that is capitalized by Bitcoin, or collateralized by Bitcoin rather, that do likely pose a bit of downside convexity risk to the market. But I don't think that that is something investors should be worried about in the super near term. That's more of a 12-month plus
For sure.
factor
I
that I
have the
have on
same
the
kind
time
of
frame.
timeline in my head too. I mean, I'm not saying look, everyone start raising your panic flags, but I am saying that it seems like because we've had these discussions with the coinage community as well, which Sean, you're a coinage NFT holder. There's a bunch of smart people here who kind of flag things. So I got a calendar alert. A lot of people who flag things around pieces to watch, not necessarily alarming, screaming red flags right now, but maybe something you have in the back of your head. And to me, that seems to be the universally agreed upon area of leverage for this cycle. Before it would have been Terra. We saw how that ended. For this cycle, who knows? And I agree. I don't think it's going to be anything in the short term, but in the longer term, I can't imagine a scenario where someone tries to think that this is easy to replicate and then messes it up big time. And maybe they're big, maybe they're not. We'll see. Outside of that, though, Sean, is there anything else we're missing in terms of what you're focusing on that we haven't covered that maybe people might be missing?
So I guess a couple of things on the bullish side, a couple on the bearish. So I think on the bullish side, people should consider FTX payouts. Those are going to probably hit the tape at the end of May. I know people have already started to get paid out. The current estimates are about $10 billion in payouts. I don't think the lion's share of that is going to make its way back into crypto markets, but even if you have 10 to 20% of that, that could be very constructive for altcoins. Um, I think it's also important that given the progress on trade, we've kind of avoided the recession scenario, at least for the time being. You have companies that have built up inventories. You have oil still below $70, and so we're probably going to see continued disinflation in the hard data in the near term, and that's alongside a jobs market that is still pretty solid. And so we could have this, Goldilocks type setup right now in the market, which is obviously very good for risk assets and for Bitcoin and crypto. Um, and like I said, leverage is still muted. Funding rates are still tame. If you look at funding rates relative to rolling 30-day performance for Bitcoin, since the beginning of 2023, funding rates in May have been in the bottom 5% of observations, while returns have been in the top decile of observations.
Hmm.
So, I think a lot of funds and traders have been sidelined for this run up. But then on the risk side of things, I do think, we talked about deficits and how that is long term very constructive for Bitcoin. I do think we could get to a circumstance where rising real yields could perhaps seize risk markets. We saw that a bit in early April. Just it's not necessarily it's more of a technical correction and broad degrossing than anything sustained or sustained. So that's something on my radar. We saw a bit of that the other day. And then the other thing is, if we do get this tax bill passed, we're probably going to have the debt ceiling raised. which again, thematically long term, good for Bitcoin. But in the near term, you'll probably have to have some. The flows will not be constructive for risk because the Treasury will have to raise a lot of capital, and that replenishment of Treasury reserves often pulls reserves out of the banking system, and that can weigh on risk assets in the short term. So,
Well, I gotta say, man, as always, appreciate you walking us through all this because I do think we are reaching a very interesting time. And to your point, it's kind of a hated rally, whether it's ETH's move or whether it's kind of, like you said, not a lot of leverage necessarily there when you look at Bitcoin. And I think that's important to stress because sometimes people are like, oh, these moves are crazy and it's all leverage. And it's like, this one actually looks like a pretty healthy rally. So I'm kind of sitting there being like, there's a lot of people who hated it at 74. Now we're here north of 100K. We've got important things to watch in DC. I don't know. I mean, if some of these things start to go the way, one last question in terms of if they don't, because that stablecoin bill, let's just say Monday afternoon comes around, it's already been defeated once, it gets defeated again. How big of a gut punch is that? Because again, that was kind of, we were just chatting with John Deaton on Monday, but that's kind of like, it was a gimme. And now it's if that one can't get done, market infrastructure looks tough. Then you got to rely on the SEC being bullish, which they kind of are. We just went down there and highlighted that. But I don't know. What do you make of if the vote doesn't go crypto's way? How bad is it?
Well, it's obviously very discouraging. I don't know if, we didn't see much of a reaction when the first vote didn't go through, reaction in market prices. So I don't know if it'll lead to sizable incremental downside in the market in the near term, but certainly is very discouraging and perhaps limits upside for speculation around some alts that would be beneficiaries from the market structure bill, and perhaps some speculative capital that would increase their probabilistic weighting on an SBR getting across the finish line this year.
Yeah, for sure. And that one, I think I just had the where was it? There we are, right there, about a 50-50 in terms of odds on Polymarket for a national Bitcoin reserve in 25. I think we'll be watching that chart because that's another interesting one, like you said, based off of the vote on Monday. A little heat check there for crypto love or hate down in DC. But as always, Sean, can't thank you enough for coming on here, man. If I wish this time it's my fault that we got to wrap at the time that we do because we'd be here all day if we could. But Sean Farrell, head of digital asset strategy over at Fundstrat, I think one of the top analysts in the space. Thank you again for the time, man.
Thanks, Zach. Always a pleasure. Talk soon.
Yeah. There you go. And for always, we leave with a reminder that, of course, all the top headlines in Web3 are available for you at coinage.media, as well as on our YouTube channel. If you're not subscribed yet, go ahead and do that. If you want to, throw a like on the video if you enjoyed the convo. And perhaps even retweet if you want to let your friends know what the hell is going on in crypto. That's what we're here for. For Sean, for myself, I'm Zach Guzman, signing off. We'll see you again soon.